Well, welcome to Breaking Bread presents LaGhetto. In this session, I want to do a brief breakdown on what I like to call LaGhetto. Other traders may call it the ghetto. Everything that I'm showing you guys is based off the strategy for entries and exits. So if you don't trade the strat, then just take the information and then apply it to whatever strategy that you use to trade. All right, so some of the things that we're going to tackle in this session is one, what is it? I'm going to talk about the pros and cons. I'm going to talk about the higher time frame, the lower time frames. I'm going to do a brief discussion on price action. Then I'm going to take it to the charts. And then I'm going to bring it back and we're going to go over the bread and butter, which is just a brief recap of everything that we talked about in today's session. So let's get into it. What is LaGhetto? Now, these are the lower time frames that are mostly used by day traders and scalpers. I know when I first started trading, and most of you probably, when you started trading, it was seen as a bad thing by trading on anything lower than the 5 minute time frames. You would hear people say, the trading on those time frames was ghetto, or it's too ghetto for me, or if you trade down there, you don't know what you're doing. You must be a scalper if you trade down in the ghetto. So I just put lie in front of it just to make it seem like a fancier place to be. But in my opinion, if you know what you're looking for, then it's the best views on the charts, in my opinion. All right. So when I'm discussing the ghetto, I am talking about the 5 minute, the 3 minute, the 2 minute, the 1 minute, the 30 seconds, and soon 15 second. I'm dabbling over there, but my sweet spot is 30 second, the 1 minute, and the 2 minute time frames. Now, this is what I consider like ghetto. And depending on who you're speaking to, they may think the hour is ghetto. They may think the 30 minute is ghetto. They may think the 2 hour is ghetto. Especially a swing trader, right? So it just depends on who you're talking to. But when I'm discussing it, I'm talking about the 5 minute time frame and down. So let's tackle some of the pros and cons of trading in LaGhetto. Now, I'm going to start with the cons. Some say it may be more noise. I get it. If you're on a 5 minute time frames, you're getting a candle every 5 minutes. Or if you're on a 2 minute time frame, you're getting a candle every 2 minutes. So that may seems like that is a lot going on. That may seems that way. And then it's less reliable signals, right? So a fell two down on a lower time frame doesn't hold as much weight as if it was on a higher time frame. A support and resistance level on the lower time frame doesn't hold much weight as it was on a higher time frame. Also, it can just be more stressful, right? So if you have more noise and then you don't have levels holding, then that makes you more tense in your trade and more stressful. So I definitely can understand those cons. Now the pros, of course, is more opportunities. You miss your play, there's always another play, especially on the lower time frames. You're getting faster feedback from price. So you already know if price is breaking structure. You know if price is holding support, breaking support, holding resistance, breaking resistance. You're just getting that faster feedback from price. You're getting better scalper opportunities. Now, I'm not a scalper, but, if I was, I could see why, it's a good thing. But I'm just not, it's not something that I conquered scalping. But it's definitely great scalping opportunities down there. And then, of course, better entries and exits. And that's the primary reason why I love LaGhetto, because I definitely get better entries and exits by using those smaller time frames. Like it says here, though, it's a good place to visit, not stay. So once you see your setup, you get in your trade, go back up to the higher time frame. Always visit, but don't stay. You can peek your head out the window and look, but don't don't stay down there unless you're experienced, or once you start building that confidence, then you definitely can, right? So like I can stay on the 2 minute, I can stay on the 1 minute, I can stay on the 30 second and it not bother me. But if you're not used to price movement and how fast it moves on the smaller, or appears to move on the smaller time frames, a move in a certain direction could scare you out of your trade, or it may prevent you from getting into your trades. So don't stay down there until you can build that tolerance up. All right, so higher lower time frame combos. Using a higher time frame in combination with the lower time frames will give you a broader market perspective and precise entries and exit points. For me personally, I use the 15-minute combination with the 5 minute time frame below. I normally scan through the lower time frames to see which one is telling me what I want to see price tell me. Um, but my sweet spot is that that 15 minute and the 2 minute, or that 15 minute and the that 1 minute for sure. All right, so using a higher time frames to identify the overall market trend and or key support and resistance levels, this gives you the bigger picture. So like I said, I use that 15 minute, that 2 minute, and that 1 minute. That's my sweet spot, but I do want to know the overall trends, and I do mark my levels off the 1 hour and 15 minute time frame as well. So if you don't have that in place, I do recommend you finding a combination that you like. What's your sweet spot? What higher time frame you like, and then what lower time frame do you think you can tolerate? Most likes that 5 minute because that's like a good in between. It's not too fast and it's not too slow. So, but make sure you have two, because you're going to use that higher time frame to identify your setup. Then you're going to use that lower time frame to get into your trade. All right, so like I just said, once you identify the trend and you see price coming off a major level on the higher time frame, then it's time to drop down and see what price is saying to see if you should enter your trade. So the same thing you look for on a higher time frame does not change because you are on a lower time frame. So if you like to see an inside candle break on the higher time frames, then that's what you want to see on a lower time frame. If you want to see price coming off your VWAP or your EMA with a special candle that you like, then that's what you want to see on the lower time frame. You just want to make sure you're going in direction of what the higher time frame is saying. So if the higher time frame is saying that we should be going shorts, then you shouldn't be going to the lower time frames looking for anything but what that higher time frame is saying. All right, so Confluence. Now, we normally talk about Confluence as the alignment or combination of multiple technical factors or signals that point to the same trade direction. We know that it increases the probability of a successful trade by confirming the setup through different methods. Now, when I'm talking about Confluence, I am talking about combining signals from both the higher time frames and the lower time frames, because I know that's going to give you more confidence in your trade. So, for example, if you have a failed two, let's say a failed two down coming off the higher time frames, then you want to go to that smaller time frames and you want to find a bullish candle, right? Because support means bottom. A failed two means that a failed two down means we're reversing back to the upside. So if we have that happening on the higher time frames, then on the smaller time frames, we want to go find a bullish candle because everything is pointing up, right? We don't want to go down there and find something that's headed to the downside. That just doesn't make sense. You want to find that candle that's heading to the upside. So that's just going to increase your chance of a successful trade. Now, price action. When you learn to read price action, it becomes much easier to understand market structure and interpret what price is truly saying. Now, I understand that it may appear like a lot of noise on the lower time frames, and I get it. But if you can just slow it down and just identify what price is truly saying, just like I hope you do on the higher time frames, then it'll become easier for you on those lower time frames. You got to understand that everything happens on the smaller time frames for you to see it on the higher time frames, right? The day doesn't tell, the day time frame does not tell the 1 minute what to look like. The 1 minute tells the day time frame what it's going to look like at the end of the day. The hour doesn't tell the 2 minute what the 2 minute is going to look like. The 2 minute tells the hour what it's going to look like when it closes in that hour. So that's why I like the smaller time frames. So in knowing that, I go down to those smaller time frames. I want to see if market structure is breaking. I want to see if we're holding market structure. I want to see if we're respecting levels. I want to see if we're disrespecting levels. I want to see if we're making higher highs or higher lows, or are we making lower highs, lower lows. That's what I want to see. The same thing we look for on the higher time frames. That's what I want to see on the lower time frames. So as far as price ranging, the market is consolidating without a clear direction, typically bouncing between a defined support and resistance level. Now this is important because once you identify your setup on a higher time frame, when you go down to the lower time frame, you want to make sure before you get into that trade, you want to look to see if price is ranging. If price is ranging, you want to make sure that you're playing in the direction of what the higher time frame is saying. And I'm gonna show it to you guys. But I feel like this is where most people get stopped out at, because if you're playing at the higher time frame and you see your setup and you get in, price pulls back, right? Stops you out, and then pulls back and heads back in your direction, and then it pulls back some more, and then it stops you out, and then it finally goes in the direction that you feel, or that you see that price is saying that it wants to go, right? So this is why it's good to drop down and identify the range. Go ahead and drop down and see if we're running sideways. If we're running sideways, then we don't want to touch that until it's heading in the direction that the higher time frame is in. And I'm going to show you guys what I'm talking about. All right, so price action to the downside. So here we have the 3-minute time frame, 30-minute time frame. Both the same price action. In my opinion, this just look a little clearer. If you saw this on the 30-minute, you'd be like, oh, it was choppy, right? But look at it on the lower time frame. We have a high, a low. We have a lower high, a lower low. We have a lower high, a lower low. Lower high, lower low, lower high, right? So all this is looking like is a trend down, a pullback, a trend down, a pullback, a trend down, a pullback, a trend down, a pullback. So this comes with practice, but when you can identify what price is saying, yeah, this looked crazy, but this looked like a masterpiece in my opinion. Like, how could I be scared of this? Oh, this is just a pullback. Oh, that's just a leg down, right? But it's all about identifying what you know price to be telling you. Like, if you can read this on a higher, it should be nothing for you to read this on the lower time frame. And just a little homework for yourself, because I'm not gonna give you the answer, but I just want to know what has to happen right here for you to know that buyers are taking over. Where does the trend change happen? What does price have to do right here for us to think that buyers are going to step in? Just a little homework for you to go back test and figure out. Um, but yeah, so this is why you want to use that 3-minute with that 30-minute. Looking at that 30, it definitely looks, it looks choppy. That 3-minute, in my opinion, just looks a little cleaner. But you're coming down here. Are we trending? Are we ranging? Are we pulling back? And then you also got to keep in mind, if you're looking at it on the smaller time frame and the higher time frames, right? You have to understand that price is being built out, right? So what does that mean? So we don't just go down the chart, right? If we're in a downtrend, we just don't go straight down. Price opens on the left side of the charts, and it's going to close the end of the day on the right side of the charts. Well, we got to get to the right side of that chart. So if you can understand that price is being built out. You see, we have a lower high. We built it out some more, we got a lower high. We built it out some more, we got a lower high. We built it out some more, we got a lower high. We're trying to get to this right side of the chart. So if you can understand that, then that's even more confidence in yourself and you reading price action. You just have to understand we're just slowly making our way to the right. You know, that's what you got to understand. We just don't go straight down. It'd be great if we did, but no, we're building ourselves out. So just keep that in mind when you're on the smaller time frames. Now, when you go down, like I said, when you see your setup on a higher time frame, you come down, you want to identify, are we in a range? So if you see here, we're clearly within the side of range on this lower time frame, right? But when you come down here and you identify your range, now I don't mark these, I can normally eye these, but if you need to mark them, go ahead and mark them. But you want to identify the level of resistance and support that price is playing in between. And then so if you were on the higher time frames and it was telling you calls to the upside, then the candle that you want is coming off this level of support back to the upside. That's the candle that you want. If it's saying on the higher time frames to the downside, then the candle you want is going to be coming off this level of resistance back to the downside, right? That's what you want to look for when you're coming down here. But once you come down here and you identify we are ranging, then that's what you want to wait for. You want to take every candle that's confirming what the higher time frame is saying until it breaks out of that range. Because it may not break out the first time. It may come back like it did here and then pushed up and then came back again and then pushed up. It may do that, right? We don't know, but you got to get in the car to find out. But just come down here and identify. Are we ranging sideways? If we are, find that candle that's giving you confluence to go with the direction of the higher time frames. But this is all sideways movement. You can identify that resistance and that support levels. That's extra. That's extra help for you when you're in your trades. All right, so to the upside, it's the same thing, right? So we got a low, a high, a higher low, a higher high. We have a higher low, a higher high, a higher low. So we got the 15 minute, saying the same thing as this 3 minute time frame: low, high, higher low, higher low, higher high, higher low. Now, if you're looking at this on the smaller time frames, you'll look at this and say, well, we made a lower low right here, so isn't this a breaker structure? No, this is why I always talk about close and not push. Care more about where price closed than where we pushed to. Yeah, we pushed and made a low, right? But where did we close at? So if I draw a line across right here, if I just drew this across, this definitely was a level. That was a horrible line. Let's try that again. If I drew a line across here, this was a level. That was no better, but you get my point. This was a level of support. All it did was push, held this level of support that it bounced off 3 times. It's doing that again and started heading back up, right? I always say it's not where we push, it's where we close. That's the most important part. So yeah, we made a new low, right? We did take out the lows here, but where did we close? That's the most important part. The most important part. uh, all right. So, um, so even that, I want you guys to identify what that higher time frame is saying as well, right? On the higher time frames, we have a fail two down hammer on the higher time frame. This is why you have to use it in combination with the lower time frames, because the lower time frame, you're not getting a clearer picture in this moment as you are right now on this 15-minute time frame. 15-minute time frame told us it was a failed two down hammer on the 15-minute time frames. So if I saw this, then this is where I'm gonna drop down to this lower time frame to look to get into this trade. Now I'm gonna draw it because it ain't here, just because I see it and I want to be more detailed. So this fell two down is pretty much this candle here with these candles here, right? Now when we come down here after we identify this, you got price right here in a range. So since price is telling me to the upside, every candle I want is coming off this level of support, right? Every candle that I'm looking to take should be coming off this level of support back to the upside. This level of support back to the upside. So that's why you have to identify if we're in a range or not. If you just simply get in off the higher time frame, it's quite possible that you're getting in off a range and then price will come stop you out, or price will come stop you out. Like that's what you want to come identify. So just make sure you're identifying. Okay, are we in a range? If we're not, then go ahead and get in that trade. Um, that's fine, but you just want to make sure you're staying clear of this. This is what you don't want to get in at, right? But if it say calls on the upside, then you want to take these candles that's holding this level of support down here. Now I prefer to take the ones that's already green coming off the bottom. But if you bold and you want to take these downtrend ones, then that's on you, right? We look for the highest probability setup. And based off the highest probability setup, why would I want to get in on a red candle to head back up to the upside? Especially this one, right? That's pretty sure that its sell is there, right? So just based off the scratch, since we don't get enter off inside candles, we're going to take the break of this high right here. Once this candle took out the highs there, and then it finally broke outside of that range. But that's what you're looking for. That's what you want to identify. All right, so some of the steps uh, that you can look to take is first is identifying the higher time frames trend. And then you want to look and wait for your setup on that higher time frames. Now you want to use the confluence, right? You still want to see a fail two down or a fail two up, or whatever you use come off a support and resistance level, a broadening formation, a VWAP, a EMA. You still want that confluence on the higher time frames. In my opinion, it is not optional to fib. Like if you don't know fibs, go watch one of the many videos that I have in my channel about fibbing. It's not optional in my opinion. That's just going to give you that extra confidence, that extra confluence that you should enter the trade or you should get out of your trade. But you should fib. Once you get your higher time frame setup that you see, Then you're going to drop down to the lower time frames and you're going to identify what price is saying. Are we ranging? Or are we not ranging? If we're looking good, then let's go ahead and find a candle that we like that confirms what the higher time frame is saying. And once price says what you want it to say, then you're going to get into that trade. There's no reason for us to be hesitating. There's no reason for us to be hesitating. After we got all that checked off, we got to get into that trade to find out if it's going to play out in our favor. So don't put in all this work and not get paid for it. As soon as it says what you wanted to say, we're in that trade. And then we're going to go back up to the higher time frames and we're going to watch it from there. All right, so let's take it to the charts real quick. And let's see what we can see there. All right, so I'm going to use NQ today. Now, I'm not going to give you my whole pre-market, pre-game. I'm not going to do that, but I'm going to show you like a little bits and pieces of what I do daily since I trade futures now. Or, not now, but yeah. I partly trade futures and still trade options. So, but this is what I do in the morning before market opens. So I normally go to the day, the week, and I see what the trends are there. And then I go to the hour. The hour is where I mark my support and resistance levels. So if you're not familiar with support and resistance level, what you're doing is you're going to look for where price is currently at, and then you're going to look to the left and you're going to identify levels where price is having a hard time breaking through. So here would be definitely be a good level, right? Tried, and even right here it tried, right? I don't mark all these lines, but I'm going to mark it for you guys because I don't want you to think, oh, she didn't mark that one, so it must be wrong. No, that's not the case at all. I just like a more cleaner chart, and I don't like all these lines on my charts, but it is a preference thing. If you want to mark all these levels, you definitely can. You definitely can. It's totally up to you. But I at least try to have a high point, a low point, and a middle range point. That's what I like to see. Alright, so then after I do that, I'm going to mark one more. After I do that, I go to the 15-minute time frames. In the 15-minute time frame, I'm going to do the same thing. I want to identify if any support and resistance levels have been missed on that hour time frame, and I'm going to fib it. I'm going to fib the most recent trend. So just looking at this, it looked like there's a level being missed here and a level being missed here. So I'm going to mark it today. I for sure know I probably wouldn't mark this one, but I probably would mark that one at the top for sure. And then I'm going to fib it. Now, just looking at price action, right? We had a strong move up. We had price came down. We made a higher low, right? So that's the lower low. This is a higher low. This is a higher high. Price action right here pulled back, and it looks like all it did was make a higher low, right? So it looks like we're making a move back up to the upside. But I always talk about protecting ourselves because this possibly could just be a pullback to head back down. So in doing that, I always say use your fib. If you watch my fib videos, you know that 78 level is my last line of defense. That's what I call it. So that's what I want to leave on right here. Because I know if price closes above this, then we're definitely going to go attack those highs, in my opinion. If price closes above this. Not push, but it has to close above this. So if it closes above this, I assume we're going to go attack these highs. If it gets up here and rejects and start heading back down, then I know a retracement is coming. But that's why I always say protect myself. Even though price action is saying we're in an uptrend, I still gotta protect myself for that just in case, because it is the market, right? So I'm gonna do it that way, and then I'm going to fit the most recent trend before the market opens. So I'm gonna go turn my back on. Go from this low to this high, And I'm going to turn my other two levels back on. And those are the levels that I use for fibbing. Alright, so I got that done on the 15-minute time frame. I'm going to use it on the 5. I feel like that's where most people are comfortable at, is the 5-minute time frame. But let's look at it. Maybe no, let's go to the 2. But let's look at it real quick, right? Just by reading price action, right? So we had a high, a low, we had a lower high, we had a lower low, we had a lower high, we had a lower low, and we had a lower high, and then price pulled back right here. It failed to take out this low, so we have a higher low. Well, price broke structure when it took out the highs here. So this pullback, because this was a strong move up, this pullback is looking like a reversal back to the upside. So now we have a low, a low, a high. We have a higher low. We have a higher high. We have a higher low. We have a higher high. We have a higher low, and so forth, right? So it's just looking like a strong push up, pull back, strong push up, pull back, strong push up, pull back, strong push up, pull back. So it's looking like we're in an uptrend, right? Let's go look at it on the 2-minute real quick. So based off the 5-minute, we broke structure here. So let's see if the 2-minute is saying something. It's pretty much saying the same story, right? We just played around in this range. We slowly made our way down. But what did I talk about? Price building out, right? So all it did was build price out here to just make a higher low and then start making its way back up, right? So we're already making higher lows on this 2-minute time frame versus that 5-minute time frame. But this is why I like it. Like when you can identify what price is saying, man, you're good. You're good. You're good. You're good. All right, so I got my fibs on. I got my support and resistance set up. I normally draw like trend lines and that great stuff, but I'm not gonna do it today. I just want to give you a little piece, little piece, little piece. All right, so I'm gonna run this forward. So I'm currently looking for, so market opens in 30 minutes. But I want to see if price is gonna hold my fibs. If it holds my fibs, then that's where I'm gonna look for entry. So hopefully you have a trading strategy that you already have in place to where if price is in a certain area coming off any type of level, you can say, well, if price does this, then I'm going to enter here. I'm going to play to these targets and I'm going to exit. So hopefully you have that in place already before you're even looking to get into a trade. But let's play it forward just a little bit. I'm just trying to get some market open. Can I speed this up? All right, so this next candle is the 15-minute time frame, right? I mean, this next candle is the opening candle, 6:30 my time, 9:30 Eastern Standard Time. All right, so you can see like we're clearly in the range. You see prices holding this level of support here. If you look at it on the 2-minute time frame, just by eyeing it, but I'm gonna mark it for you guys because I want you to be able to identify this range that price is in, right? So I'm gonna mark it, but you can clearly see we're playing off these lows and we're playing off these. Let me go to this high here. I'm gonna go to this high. So every time price gets down here, it bounces up. Every time price gets up here, it comes back down. So it's just playing with inside this range, right? So I want to see what this next candle is going to do. Do we break out of this range and take off or what? But that's 6:15, so the next candle, 6:30. We'll see what happens. All right, so this is at 6:24. So this is 6 minutes before the market open. We're back on this side of the range. Now, if I'm looking to get into this trade, then I would look to get in this trade to head back to the upside. Only thing is on the 15-minute time frame, and this is before market opens, but just imagine that it wasn't. On the 15-minute time frame, it is holding this level of support. So you must understand the risk of you getting into a trade that's going opposite of what the higher time frame is saying, right? Higher time frame is still saying to the downside, even though it's holding this level of support. So just understand the risk of when you're getting into the trade. Can you get into this trade? You definitely can, but just understand the risk that comes involved when you're going opposite of what the higher time frame is saying. All right, so this next candle is going to be the opening candle. Let's see what happens. All right, so looking at it on the 2 minute time frame, you see price again got back to the downside of this level of support, and then it took off. So based off the strat, just based off the strat, your entry on this candle or on this play would be the 50% of this red candle here, this downtrend candle. Once price got above 50% of that, if you want to fib it, you definitely can. But the halfway mark of this candle is where you would get into this trade. Once you confirm whatever setup you is, I like outside bars. I got videos about outside bars. I love a good outside bar. But once price pushed down and started to pull back up and got through the 50% of this candle, then this is where I would look to get into this trade. Now, if you look at it on the 2 minute time frame, the candle is a little different, right? You're going to get in the halfway point of this candle here, right? That's your entry. And then you're just going to play it to target to the upside. But that's what you're looking for. When you come down here, are we ranging or not? And if we are ranging, is it at the point to where I want to get into this trade? If I'm looking for this for calls, like I said, you want your price to come off support. If I'm looking for this to shorts, then you want your price to be coming off the resistance levels back to the downside. But that's what you're looking for, right? And then you see it just took off to the upside. But like I said, your rules don't change because you are on the lower time frame. So whatever you want to see on the higher time frames, that's what you want to see on the lower time frames. You want to look for that same type of confluence, right? And then you just got your added confluence here. I got price coming off my 50%. It's holding my level of support. That's confluence, right? And then it agrees with the smaller time frame, because on the smaller time frame, they're saying pretty much the same thing that is being said here um, on the lower time frames. But let's move it forward just a little bit. Let's see if we can find a setup, another setup to the downside or the upside based off the scrap. It went all the way up there, huh? All right, let's see. All right, so let's look at it real quick. So this is what you have to understand the risk when you do this. So here in this situation, based off the strat, you have a fail to up candle here, right? Right. You have a fail to up candle. If you wanted to look for entry just based off the 2 minute, this is why you have to use combination, right? Because yeah, the 2 minute is giving you a strat signal that's telling you a reversal is coming. But look at this 15-minute time frame. You have conflict. You don't want to get in on conflict. If you do, just understand the risk that's involved when you're taking something against the flow of the higher time frames, right? I showed you that the higher time frames were saying to the upside. The hour said the upside. The 15 is saying to the upside, right? So you're going against the flow when you're taking this. Now, can this turn into a possible reversal and head back down? It definitely can, but just understand the risk involved when you're doing it. Now, this is a perfect example why you don't stay on the lower time frame. Because if you would have got in here, then this definitely probably would have scared you out of your trade, right? You definitely probably would have got scared out of your trade. Um, right? This is a deep pullback. But if you got in off the top, and this is why I say it can pay, you definitely can do it. Because if you got in off the top based off the scratch, that's definitely some good price movement to the downside. But I always go with the flow. I'm not a fan of going against the flow. I'm just not a fan of it. Um, but you see, all it did was get to our higher resistance level. It came back down and held above this 78 level that I drew on the what was that, the hour time frame. I said all I need for price to do is close above this. Then I knew we were gonna, not I didn't know, but it's a high probability that we're going to go attack those highs that was created. That's why I draw the 78 here, because I know once price gets beyond that, we're good to go take those highs out. But so once price did that, I have to trust this that we're going to take those highs. And then you see this next candle opened inside and it just went a little higher. But this is why you have to use those higher time frames with the lower time frames. This is not to tell you that the lower time frames can't pay off, because it definitely did in this situation, right? But always go with the flow. It's just a higher probability to go with the flow what the higher time frames are telling you. So go with the flow. Just make it easier on yourself. But make sure when you're coming down here, you're identifying, are we in a range? If we are in a range, then you want to mark it. If you can't eye it, mark it. But you want to catch the candles that's going in direction of the higher time frames. Like I said, if we were playing to the upside, then all your candles should be coming off support. If this was saying to the downside, like this candle was, then all the candles that you want should be coming off resistance. That's what you want to identify. If you come down here and we're not within the range and it's coming off the right side of the chart that you want to see it come off of, then you want to play that in that direction. But just make sure you're doing that, because getting caught in this will have you getting your patience tested, and we don't need that. So just make sure you identify what most would call noise, but this is just consolidation, right? This is us building price out so we can get to the right side of this chart before the end of the day. But that's what you're looking for. So hopefully that helps you guys better understand the lower time frames. I hope it did. If it didn't, then you can always reach out and ask your questions. But let's do a little brief recap. So I said the LaGhetto, I call it that. It is the 5-minute time frame below. I use LaGhetto for better entries and better exits. It's definitely a great thing when you don't leave as much money on the table as you would if you were playing off the higher time frames. Also, reading what price is saying. The same thing you want to read on the higher time frames is the same thing that you want to read on the lower time frames. So if you can read price on the higher, you should be able to read it on the lower time frames. I don't care if you think it's too much noise or anything like that. You still can identify what that swing high is, or what that swing low is, or what that higher high is, or what that higher low is, or what that lower low is, or what that lower high is. You should still be able to read that on the smaller time frames. And like I said, what you look for on the higher time frame is the same thing you look for the lower time frames. You just want to make sure you have that confluence, right? The higher time frames is saying calls, then your lower time frame, you should be looking for a calls candle. You should be looking for an uptrend candle. If it's saying shorts, if it's saying puts, then you should be looking for a red puts downtrend candle to the downside. That's what you want to make sure you're doing. Like I showed you guys, you can go against the flow if you want to, but just understand the risk that comes with you going against the trend, right? We want the highest probability setup, and that's not always the highest probability setup. Can it pay out in your favor? It definitely can, but just accept the risk and assume the risk and know the risk when you're doing something like that. And then also the rules of your plan remains the same. Whatever your strategy is, that remains the same. The rules of your plans, that remains the same. Whatever your entries, your exits, your targets, that all remains the same. Your exit plan, that all remains the same. That doesn't change because you're on the lower time frame. So make sure you're staying disciplined. Make sure you're remaining patient. Make sure you're letting price set up for you, and you're actually reading what price is saying, not just jumping in just to jump in. No, actually read what price is saying and trust it. When it tells you what you want to hear, then push that button and get in that trade and get paid for the work that you're putting in. All right, so we have come to the end of this session. Man, we are in the last quarter. We are in the last quarter of the year. Hopefully you guys have reached your trading goals. And if you haven't, it's not time to quit, right? It's just time to go harder. So let's go harder. But if you guys have any questions, feel free to reach out to me. But until next time, I thank you guys for breaking bread with me. You guys stay blessed.